Alright, what's up guys? I had to pull out the Ray-Bans for this video because you already know this is going to be a good one, okay? This is the video that everybody has been waiting for, the fucking strategy video, okay? I know you guys have been waiting for this video for a really long time. So, I had to get classy for this one. My strategy is called the ATM model, okay? And you could guess why it's called the ATM model because this shit is literally a money printer, okay? So we're going to get in this video. Just want to give you guys a quick intro. Like, again, you learning the strategy is not going to guarantee you become profitable, okay? Everybody asking me for the strategy video, like, y'all are tripping if you think this video is going to make you profitable, but it's definitely a tool that could help you become or reach that profitable stage that you've been waiting to reach, okay? But you solely watching this video is not going to make you profitable, okay? That's just a little disclaimer, okay? A little intro before we get into this video. So yeah, hope you guys really enjoyed this video because this one is going to be a good one. Again, I know you guys have been waiting so long for this, so fucking stay tuned and watch the fucking video. Make your fucking notes, and if you don't print money, you're just a bum. All right, so before we head into the charts, I obviously want to kind of give you guys kind of like an idea of how the strategy works. Like I probably put into the title, it is kind of like basically a 3-step strategy. If you follow these 3 steps, you can basically trade my strategy and the way that I trade. Again, it's a really simple way, and it's really nothing like that new. It's not some kind of enigma or anything, guys. This is basic ICT with my own twist behind it. But again, it's not something entirely new. So I'm not claiming to have some type of secret strategy that will make you profitable, okay? I'm making this video simply because a lot of people have been requesting this, and I am a pretty young trader that has seen some success with this strategy, and so that's why I'm making this video, okay? So before we head into the charts, I want to show you guys kind of the schematics of the strategy, like what exactly do I look for when I'm hopping into the charts every single day. And so again, this is a 3-step strategy, guys. It's really simple. If you follow these 3 steps, you will basically be trading exactly how I trade, okay? And obviously you do need a little bit of trading knowledge if you want to trade the strategy. You do need some trading knowledge. For example, you have to know what a fair value gap is, you have to know what an order block is, you have to know what premium and discount is, and equilibrium, and all of those concepts, okay? I'm sure there are a lot of videos on YouTube that you could watch to learn those concepts, and I suggest you guys watch those before you head into this video, before you actually watch this video, before you continue watching this video, okay? But if you know what those concepts are, if you know what SMT is, okay, smart money tool, one of the best things you could possibly use, by the way, okay? If you know what those terms are, if you know what those concepts are, then you should be good. You should be able to apply this strategy into your trading, or apply the things that I use into your trading. All right, so basically the 3-step strategy is literally just having a higher time frame context, okay, higher time frame reasoning for price to do something, okay? Everybody knows this in the trading industry, that the higher time frame is king, okay? The higher time frame will determine what the lower time frame does. So you cannot be trading without higher time frame context. So what do I mean exactly by higher time frame context? Higher time frame context is basically, okay, we know liquidity sweeps, we know fair value gaps, and the price usually reacts when price taps a fair value gap, and what happens when price inverses a fair value gap, those type of things, okay? So basically things that you look for on the lower time frame, I'm going to be looking for that, but on the higher time frame, so I could kind of get like a context of what price wants to go and where price wants to go on the higher time frame. So basically what you look for on the lower time frame, I'm going to be looking for on the higher time frame also, because everybody knows that price action is fractal, okay? So usually when I hop onto the charts in the morning, the first thing that I do is send out my pre-market analysis for my VIP group, okay? And what I'm doing before I send that out is looking at the daily chart. I'm looking at the weekly and the daily chart. I usually don't look at the weekly a lot, but when I do look at the weekly, is so I can see maybe some possible weekly fair value gap that price tapped, a possible weekly order block that price tapped, okay? How far are we into the week? Are we on the last day of the week? Is it a Friday? Because usually we could kind of expect some type of reversal on a Friday. I check things like that. Did we sweep a previous day high? Or did we sweep a previous week high? Did we sweep a previous week low? Stuff like that. I check on the weekly, and then I basically do kind of the same thing, but on the daily. Then I see if we tapped into maybe a daily fair value gap. Are we in a daily inversion? Are we in a daily order block? Did we fill in a new day opening gap? Did we fill in a new week opening gap? I check things like that. Did we sweep the previous day high? Did we sweep the previous day low? All of those things I'm checking because it's going to help me to have a higher time frame narrative on where price wants to go. Do we have daily SMT? Do we have weekly SMT? Again, the higher the time frame, okay, the better. So I want to have all of these things aligned, especially if it's with the weekly and the daily. I want to have all of these things aligned with each other, because that's going to make the trade and just the narrative in general. Because I could have a good narrative, I can have the right narrative, but that does not mean I'm going to find a trade, you know? But I'm going to be using all of these things to form a right and a more accurate narrative on what price wants to do on a certain day. Okay, so usually I'm checking all of these things, and then I'm looking at the 4 hour. Okay, the main difference between the way that I trade and normal ICT traders is usually I check for every time frame. I'm looking at every time frame. I'm looking at daily, weekly, hourly, 4 hour, 50 minute, and then I'm looking for my lower time frame confirmation. Some people just simply use an hourly PDRA and then 5 minute confirmation, and there's nothing wrong with that. I'm sure you make money doing that, but the way that I trade, I check all of the time frames. Okay, the thing is, and this is exactly what I'm going to be explaining in this video, is I don't need every single time frame, but I do check them, and I'm going to explain you guys the difference. Okay, so for example, after I'm watching the daily and the weekly, I go to the 4 hour. Usually I really love using 4 hour for value gaps. Okay, this is really one of the best things that you could use, is a 4 hour for value gap, especially if they are really recently created. Okay, this is some free sauce for you guys. 4 hour for value gaps that have just recently been created are usually so high probability, and I literally caught a long today based off of that. Okay, but usually you want to check the 4 hour for value gaps and just the general 4 hour structure. Did we sweep any 4 hour lows, or did we sweep any 4 hour highs? How is it looking? Is it looking more bullish? Is it looking more bearish? How are these bodies closing? How much volume are in these bodies? Is it looking really bullish with big bullish bodies, or is it looking bearish? And I'm just looking at the 4 hour again to frame a better narrative, and I really just like looking at the 4 hour structure. Okay, after that, I'm hopping onto the hourly. Okay, the hourly I'm not using really a lot for kind of like higher time frame context, but more for my PD arrays. Okay, I want hourly PD arrays to be able to frame a trade and to know when the time is right. So usually if I have like a 4 hour bullish bias with the 4 hour telling me we're going to go higher, and that the 10 a.m. power of 3 or whatever you want to call it, that the 10 a.m. 4 hour candle is going to print higher, I usually want to see then before that 10 a.m. candle opens. Okay, I usually want to see price tap into an hourly array, usually before, and then we just expand during the open of the next 10 a.m. candle. Okay, I usually want to see something like that happen. Again, into an hourly PD array, because the hourly is really just my bread and butter. Okay, once I started really utilizing the hourly, that's when I really started seeing a lot of progress in my trading. Okay, so I usually want to see price just trade into an hourly PD array. So sweep an hourly higher low, or trade into an hourly order block, or an hourly fair value gap, or whatever. I want to see price usually manipulate into an hourly PD array for then price to start expanding and showing me that price wants to go in a certain direction. Okay, so that's why I use the hourly. Okay, for my PD arrays. And then usually when I have all of those things aligned, I then just look at the 50-minute. The 50-minute tells me if the time is right. That's simply what the 50-minute is telling me. The 50-minute is telling me when the time is right. If the 50-minute is not looking clear, the time is usually not right. Okay? It's plain and simple like that. If the 50-minute is not looking clear, the time is not right. It's really simple. Okay? If the 50 and what do I mean by the time being right? 50-minute is showing willingness to go higher. It has tapped a PD array. Okay? Just like I look for hourly PD arrays, I also look for 50-minute PD arrays, 50-minute order blocks. In what direction are we creating 50-minute arrays? What side is the 50-minute respecting the most? Okay, I want to see things like that, and that usually determines, especially 50-minute SMT, and that's really key. When you have 50-minute SMT, that's one of the best things that you could possibly have. Okay, when you have 50-minute SMT in your direction, that usually means that your trade is going to hit TP. And so the 50-minute is basically just telling me if the time is right. And if the time is right, if everything is aligned, that's usually just an A+ trade. I'm going on to the 5-minute or the 1 minute for my confirmation. Okay, so this is a clear example, and those are the 3 steps. And what am I targeting? A 2-to-1. Okay, those are the 3 steps of my strategy. It's really simple. It's not that hard. Okay, I'm targeting almost always a 2-to-1. I almost never target more than a 2-to-1 unless it's literally dumb clear that we are going to go to more than a 2-to-1. So for example, if my 2-to-1 is, if I'm in longs and my 2-to-1 is below London highs, but I know that we're going to go to London highs, then I might target London highs. But even then, I try to just stick to my 2-to-1 because it really just maintains consistency. And it's, again, one of the things that really helped me to just maintain that consistency and discipline in my trading is simply just targeting a 2-to-1. It really just helps you be more mechanical. Okay, and those are the 3 steps of my strategy, literally having the hourly, 4-hour, daily, all of those, okay, aligned, the 50-minute, and then looking for lower time frame confirmation. When I get my 5-minute or 1-minute confirmation, we're going to get into the difference between those two when I am trading those. But when I get the confirmation on those two that price is going to go, then I'm just targeting a 2-to-1, and that's literally my strategy. That's my ATM model, and that's literally the only thing you need to become profitable, guys. It's really not that complicated. It's not that hard. Okay, I'm not saying you're gonna find setups every single day. I never claimed that, because this is a model that you do need a lot of things aligned for you to find a trade. So maybe that is one of the downsides, that you're not gonna find a setup every day. You're not gonna find a lot of setups. You might, I say on average, you find 3 good setups on every week. Okay, and that's really, really good. I'm not complaining at all. That's why I'm really content with the way that I trade and the way that I've developed the strategy, because it's perfectly aligned with the patience that I have as a person. And so I'm okay with taking 3 setups per week. Sometimes I find more, sometimes I find less. It depends. Okay, but what am I looking for? Or before I go into what am I looking for on the 1-minute or 5-minute for confirmation, I'm going to show you guys kind of like an example and some trade example. Okay, so this is, for example, a boiler scenario. We have price going lower. Again, everybody knows for price to go higher, we need to go lower first. We need to manipulate. Okay, price goes lower, taps a higher time frame PD array. This could be a 4-hour fair value gap or an hourly fair value gap, or those both aligned. Okay, and then 50-minute confirming whether it's of some type of 50-minute SMT or also a 50-minute fair value gap. And then what do I look for? I look for some type of 5-minute change in the state of delivery. Okay, everybody knows what a CISD is. A change in the state of delivery is when we validate an order block. Okay, or I'm looking for some type of market structure shift, or just something along the lines of that. Okay, there are so many ways that you could interpret, like a way that there are so many ways that you can interpret a reversal happening. And so it really doesn't have to be specifically a change in the state of delivery. It could just be a market structure shift, or, you know, just make it your own. Okay, and so I look for that is literally my lower time frame confirmation. But the only difference is when I'm looking at the 5-minute, SMT is optional. But when I am trading the 1-minute, I do 100% need SMT. I'm not taking trades on the 1-minute without SMT. Okay, the 1-minute, you could get chopped up so easily. So that's the only difference I would say, is that when I'm trading the 1-minute, I do need SMT. But when I'm trading the 5-minute, and when I see a 5-minute fractal setup, then I don't necessarily need SMT. And that's really just the main difference between the way that I trade and the majority of people. Okay, and that's, so this is how basically a bullish example looks, and this is how a bearish example looks. Again, just the opposite. And really, really, really simple, honestly, just the 2022 model. This is, for example, the trade that I took today, a really clean long. We tapped into the higher time frame PD array. We had an hourly fair value gap. Okay, we had 4-hour context for price to go higher because we swept 4-hour lows. Okay, we swept, which were also daily lows. So everything was aligned. We had an hourly fair value gap, 50-minute order block, and fair value gap. And then I was in this scenario, okay, in these conditions, I'm looking more at the 1-minute than the 5-minute, because I've seen that the 1-minute is working better. I adapted my strategy, and I've seen that the 1-minute is working better than the 5-minute these months, you could say these last 2-3 months. So I'm trading more the 1-minute. So I went then to the 1-minute. After I had everything aligned, I went to the 1-minute. What did I see? I see price starts displacing higher. We start inversing opposing gaps. Okay, we start inversing bearish gaps. So that's already me seeing, okay, price is willing to go higher. But what do I need? What did I say I need before a 1-minute entry? I need SMT. I wait for this SMT here. Price then starts displacing higher, and that's my cue to enter. Okay, after we print that SMT, which is also a form of internal manipulation, okay, price then displaces higher, I enter on that retracement. Really, really, really simple. It's not complicated. Okay, then I enter. My stop is then somewhere down there. Okay, usually when we have SMT, you don't need a big stop loss, and then boom, price just fucking pumps to my TP, and we take out I don't know if we took out London highs, but we took out, I think, an unmitigated 15. We traded into an unmitigated 15-minute PE array, and that's exactly where my 2-to-1 was. So it was perfect, and boom, just really nice steep. That's basically how I frame my trades, guys. Everything needs to be aligned, and then looking for lower time frame confirmation, and I just enter, bro. Stop hesitating, stop thinking too much about it. This is another trade example, another long I took this week, and this was last week. Again, really clear, really nice trades, guys. And I really hope you guys kind of really understand the way that I trade now. It's really not that complicated. It's really simple, a couple of steps to your strategy. And yeah, I hope you guys enjoyed this video. And I might come out with a video of me back testing this live. I don't know yet, but that's a potential video that might be coming out. But I really hope you guys kind of enjoyed this video and really learn from it. Remember to make your notes, okay? It's really not that complicated. I'm not trading a really complicated way. It's simple ICT with, again, a little bit of extra things implemented by me. But again, really simple. Keep it simple. A 2-to-1 is all you need to keep the 9 to 5 away, guys. Okay? I hope you guys enjoyed this video, and I'll see you guys in the next one.